Hi, hello, how are you?
Very good, thanks. What's your question for the panel?
My question is, my wife and I, we've been investing in property for quite some time.
Yeah.
And we've been quite successful. At the moment, we're in a situation where we're looking at buying another property, using our own money, paying cash,
yeah,
but using it through our super fund.
Right, okay.
And the question is, what benefits does that do for us?
Sure. Okay, so something for you there, Shakri, is if people have got the chance to invest within the super fund, what are the main benefits?
Look, the benefits is the tax on income in the super fund is very low. It's 15% for just net rental income, and it's 10% for capital gains. So if you hold it there long term, you would be able to benefit hugely from that. Lower rate, lower tax, that's the advantage.
Yeah. Now, rules changed on that, was it about 2 years ago? And everyone thought there was going to be a massive flood of people doing it, but it's actually been reasonably slow, kind of, the uptake, hasn't it?
There is a lot of interest at the moment where super funds are trying to, that's self-managed super funds specifically, borrowing money in order to fund rental properties inside it. It's not so simple though, and it does work, but there are limitations.
And so what are some of the considerations to kind of weigh up whether you do it outside of super or within super? Because again, it's not all about the tax, is it?
No, it's not. Look, I have a client at the moment who are trying to buy some property into their self-managed super fund, and the considerations I discussed with them are this. Firstly, they were going to have negatively geared property, and it would be better to get some tax savings outside of self-managed super fund. On the other side, had they tied the money up immediately and they didn't have enough inside the super fund to anchor it, for example the deposit, you really need to make sure that when the property is in there, it can cover the expenses, make the repayments, and still be liquid enough should a member of the super fund want to retire or something happens that their beneficiaries want to access that money. So it's not as simple as ABC, but certainly if you have the cash and you have other properties around the place, very advantageous to hold it in there, because later on you will take that money out with no tax paid when you reach the appropriate age.
Now, Patrick sounded reasonably young on the phone, but it's obviously hard to tell.
Yes.
For younger people, one of the main disadvantages is it's very hard to refinance, or impossible to refinance, pull the equity out and keep repeating, which is a lot of people's strategy, isn't it?
There is all the time. A lot of people, what they do, they buy, and if they're smart enough, they add value to the property either by renovating or whatever, and immediately you will have increased value. Then they'll go to the bank after getting a valuer, which shows the increased value, and they will ask the bank for that additional money in order to go and start their next property investment. And that's how they continue to go, or they can have that increase should the interest rates go rising up and the cash flow is a real problem. Then they will use that money to pay out the extra interest, because there is just no more, and you're better off keeping a property that has potential to grow very quickly than to sell it.
Now, Doug, we've been talking about property prices increasing. Some people are arguing in the industry it's because there's a housing shortage, and the government or the councils or whatever aren't releasing enough land, or it's too expensive. What are your thoughts on that? Because certainly Western Suburbs has got quite a few areas where they have built a lot of new properties.
But even still not enough. A little known fact is that 1/10 of the entire Australian population lives in the Western Suburbs of Sydney, and yet we're struggling still with a undersupply. It's said that there's somewhere in the region of 110,000 properties short of where there should be, you know, as a nation, and that problem's getting worse. I reckon within 10 years it could be as much as 400,000 based on population growth. So that it is a problem. It needs to be fixed, and needs to be fixed quite soon. It can only surely be the federal government that can intervene. At the moment it seems as if before a developer's even laid a brick, he has to pay through the nose for various things. Certainly infrastructure levy is a big problem. It almost seems as if everyone's got their hands in the cookie jar. So something somewhere needs to change, and needs to be done quite quickly, and I would assume that would have to be federal government intervention.
Now, obviously for the people that have got nowhere to live, that's an issue, and I'm not sure where they're living at the moment. Also for people trying to get in the market, it's an issue because then property prices are expensive. But for the people that do own property, is that basically something that the government does need to control? So if there is generally always at least a bit of a shortage, then at least it controls house prices and keeps them at reasonable levels rather than collapsing them.
Absolutely. I mean, look, you know, we were one of the very few developed economies in the whole world that seemed to escape the global financial crisis recently. The housing market obviously is a good barometer of the economy as a whole, but I think it's fair to say that, look, you know, the market is artificially underpinned by the lack of supply. So look, it's a very, very difficult juggling act.
Yep, and we'll leave it to the governments to do.
Absolutely, yeah.
Trusts. A lot of people are asking, should they get into trusts and companies and put their properties into those? Is there a right or wrong answer?
It all depends on the circumstances, Chris. Overall, why would you go into a trust? Generally speaking, to protect your assets from frivolous claims, because you can't really protect your assets from legitimate creditors, that's illegal. And so frivolous claims is where you work very hard, long time, to accumulate that wealth. You don't want to just lose it from there. Also, you can, using a trust, minimise the tax by allocating it and distributing it to members of the family who are on lower rates of tax overall. So that helps out. Then you might want to hide the wealth from other people. There are people out there who just do the wrong thing, and you don't want to show them what you're doing. It's none of their business, and that's where you're at. Then you've got family succession. You may reach an age where you've had enough, you don't really want to manage anymore, you want to hand it over to the children, and at the same time you don't want to pay capital gains tax or stamp duties to transfer the total asset to them, but you want to transfer control to them. So that's another way of helping out with that. And just planning for retirement, outright planning for retirement. It makes it easy if you have to pay less tax and so forth going forward.
Now, certainly for first home buyers, they've got limited deposits. It can be quite a cost. Is it something that maybe they should leave for later on?
Look, generally speaking, I find in my practice where you've got people in their early 20s, for example, with limited amount of cash, some cash to pay the deposit, other cash just to pay the mortgage insurance, then how are they going to pay for the structure, the outlay to set it up and to maintain it? So what I say to them, look, just to get you started, because then you've got capital growth and then you move forward, reconsider the situation when you buy your next property and your third property.
Sure. Doug, last minute on the show, what's your thoughts on the outlook for the rest of the year?
Look, I don't think it's as doom and gloom as some people will say. As I said earlier, maybe 2 to 3% growth until the close of the year, but generally speaking the market's in a fairly healthy place at the moment. Yeah.
Chakri, any last tips for those doing their tax returns?
Start to plan right now. You've got a few weeks left. You can still get those repairs and maintenance done. You can prepay your interest if you should choose to, and just follow through. Consult your tax advisor and plan your move before rather than after you actually do it.
Yeah, and certainly for people trying to find accountants, when's it the right time to realise that your accountant's maybe not up to scratch and it's time to find a more specialist one?
It's all the time. Planning for tax is not just at year end, Chris. It should be being done constantly right throughout the year, and that's where you will find, look, we need to start looking at things, but definitely before you start your next project. Right. If you're going to add property or if you're going to sell property, you need to know what the impacts are. That's when I get the calls from people. Great.
Chakri Bar from Property Tax Specialist and Doug Driscoll from Star Partners. Thank you
Thank you
very
for having
much.
us. Thank you.
Thank you for the viewers at home for joining us again, and to those that have rung in with the questions. On next week's show, is it possible to insure your investment property for absolutely every eventuality? And what's the cost of that? And solicitor or conveyancer, which one should you use and on what occasion? I look forward to seeing you again next time. Until then, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.